Here is everything you need to know about the latest market crash and why the dollar can still come out on top. Let's jump straight into this video. Morning, 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 baby. Happy Tuesday. I hope we're all well and truly led. Yes, we're back. We're back with another day in these beautiful markets, or should I say crazy markets. Boy, has a serious amount of volatility rippled across the broader financial markets. And obviously, I've been warning this for months, right? That something was looming. And, we're starting to see the signs of that. Now we've seen a bit of stabilization, but it's not to say those moves that we saw over the course of sort of Sunday, Monday, and obviously at the back end of last week as well, it's not to say that it's not going to happen again, because it will. Things are extremely sensitive and extremely delicate. And what I want to do is simplify the moves that we've seen of late, just so that you're well educated and well informed. And then at least, you have your finger on the pulse of understanding of why the markets are moving the way they are. So why don't we start off, first of all, with yesterday. Okay, let's start off with yesterday, and I'm going to bring up the Nikkei here first of all. This is, for anyone that doesn't know, this is the Japanese index, right? The Japanese indice, Nikkei 225, which plunged. Okay, if you look yesterday, that was a massive plunge where trading had to actually be paused. Okay, you can see a big drop there of over 12% for the Nikkei. Now, this sparked some serious worries and concerns that rippled across the markets. At the end of the day, if a stock market is crashing, it shouldn't be falling as much as that in a single day. It just shouldn't be, okay? Unless we're having, a bit of a crash, a flash crash. And remember, I said flash crashes are due anytime soon. And this is an example of one. That's a flash crash in some sense. Now, why this happened? This is very important. Stay with me here, guys. Why did this happen? Do you remember the Bank of Japan hiked rates, right? They hiked rates last week, okay? Which is obviously, at the end of the day, that's a negative for yen, right? Because when we're hiking interest rates, we're hiking costs as well for, obviously for consumers, but not just consumers, for businesses. Businesses still have outstanding debt. They're still paying money back to banks. They borrow money to boost their infrastructure, to boost business operations. So they're going to have to pay higher interest. And also it affects the consumer, right? Consumers are going to have higher costs as well. And then if consumers have higher costs, then they're going to be spending less on these businesses, these businesses that make up the Nikkei. So it's a bit of a negative, a double negative for stocks. So stocks, understandably, will come under some pressure. But the real added thing, the real added pressure that comes for Nikkei, okay, which is why this sell-off really sparked off, is because of this. Okay, what is this, Ken? What's this? For many months, I've explained this to you guys before. For many months, we've seen yen consistently weakening across the board, okay? Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why has the price just spiked here because of this fundamental reason? I don't understand it because all this information is over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Just put this on a naked chart. Look here, yen consistently weakening versus its peers across the board. Why? This is known as the carry trade. So for many months, okay, for a long time, where rates in Japan, remember, rates were negative. Rates are very low in comparison to other major economies. Rates are low, right? So that's a yen negative. Other currencies have an edge over the yen because rates are low. People aren't going to gain, investors are not going to gain any interest in Japan because rates are negative, rates are low. They're going to gain interest in other major economies, right? You understand that? So what we have is the carry trade. So people borrow in Japan where, remember, if you borrow as well, it's not just the rate that you pay back on so it's not just the rate that you earn, okay, as an investor, right, your yield. It's also the interest that you pay back on your debt. So what people do is where rates are low, they can borrow with a low interest. They're paying like nothing basically to borrow that money. And then they go and take that money and go and invest in the United States, go invest in the UK, they go invest in New Zealand, Australia, so on and so forth, right? Okay. So that's the carry trade. So they're borrowing in Japan, okay? So they have to, they borrow in Japan and they want to then go and invest in the United States. So they've got to sell their yen, right? They sell yen. So we have yen weakness and they go and buy in dollars, they go and buy in GP, Aussie dollar, so on and so forth. So there's strength in those other currencies, okay? Yen weakness, strength in the other currencies. So those yen pairs only head to the upside. Does that make sense? Okay, you're still with me here. Now, because recently the Bank of Japan started hiking rates, okay? They've started hiking rates now. We're getting a massive unwinding of that carry trade. Do you see? Look, we're massively unwinding that. When you look on a monthly, obviously things really shaping up, you know, for further downside, but we're getting a massive unwinding and it's happening quite quickly, okay? Because the Bank of Japan are starting to hike rates. So effectively where we had all these traders, these institutions, you know, retail guys as well, that effectively were, you know, not just on a speculative level, yeah, on a speculative level, but also physically, you know, conducting outflows from yen into other major economies. And obviously you've got the speculation side of it as well. We're getting an unwinding of that carry trade. So people are now having to close out those trades, okay? And there were, you know where this is quickly happening as well? It's like a herd effect, right? Where you got the Bank of Japan hiking rates, a lot of institutions, big houses, big portfolios will be closing out that trade. So then it forces you know, this drop, okay, this reversal. And then the herd starts to follow. The herd, i.e. the retail market, everybody starts to follow, panic, 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 closing out these positions. And then what would happen as well, where it's, some people may not be able to get out of that position as quickly as they could or should. So then they get margin called, right? You know, if your position's going against you, because they would have been long, all these yen pairs. And now obviously it starts to fall against them. They're getting margin called. And obviously, you know, they have to cover that position. So remember, when we're covering that position, effectively they were selling yen previously to buy other currencies, right? But now they're having to buy back yen to cover that position, to close out that position, to cover it, to cover losses. They have to buy back yen. So that further exacerbates this move to the downside. You see the demand for yen, right? So the demand for yen picks up. Now, obviously, all of this as well brings massive uncertainty, right? A lot of uncertainty. So what happens? More demand for yen. Do you get that? So we've not only got the closing of the carry trade position, okay, we've got the closing out of the carry trade position, a reversal of that. We've got the need, we've got margin calls going on, so buying back yen, and then we've got the safe haven flows. So all of that is exacerbating this move to the downside, guys. And obviously, safe haven flows into yen, weakness into Nikkei. At the end of the day, Nikkei stocks is a riskier asset. So Nikkei just got hit hard, and hence that crash. Hence these big flows into yen. Okay? Big flows into JPY. So that, my friend, is why we saw a lot of safe haven flow yesterday. You would have seen, if you look at some of the Swissy pairs as well, let's just take a look at CAD Swiss, for example, there. You know, we had a big drop. Aussie Swiss, big drop. So Swiss franc, JPY was strengthening. Dollar was under a little bit of pressure. I'm going to get into that in a moment. Okay, dollar is initially faced with some downside. As I say, I'll talk about that in a moment. I just want to sort of cover ground just so you guys are aware of why we saw the moves that we saw. We've seen a bit of stabilization of late, likely to be some profit taking, likely to be just at the end of the day, the market needs to correct. Okay, and we're just having that period of correction. But as I say, this could at any moment could just trigger again unless some action is taken, because obviously these are drastic moves that the BOJ are taking as well. Bear in mind, this is a extremely sensitive time, especially for the Japanese economy as well. So they may need to do something to try and stabilize the markets. Okay, they may need to do something to stabilize the markets. So that's why the yen has been strengthening. Let's just talk about dollar a moment. Now, it still ties in with yen, bear in mind. Remember that carry trade scenario that I spoke about to you guys, right? Where you look at dollar yen, right? Look at dollar yen. Very one directional because of that carry trade scenario. The carry trade scenario is predominantly made up of that dollar yen trade. Okay. Obviously, it happens elsewhere, but the dollar yen is the prime driver of that. And also, you got to remember, Japan is one of the biggest holders. You know, Japan as an economy, as a country, they are the biggest holders, or the second biggest, excuse me, holders of US government bonds, of US debt. Okay. So where Japanese officials hold a lot of, effectively, they hold a lot of US dollars, right? They got all this US investment. They got all these US dollars in their reserves. Now, effectively, we get a massive unwinding of that. Okay. Because, okay, let me just make this part very, very clear. I've just brought up Investopedia here just so you can see. I just had to clarify it. Okay, so obviously Japan is the largest holder of US treasuries. Okay, so they have a lot of US treasuries, you know, that they've invested in. Okay, so why this is important for dollar yen is because, so say, for example, now the Bank of Japan have started raising interest rates. Okay, now a lot of big Japanese institutional houses, investment houses, all of this, and including the government, now that they're domestically, their interest rates are going up, they may look to take advantage of that domestically as opposed to overseas, right? So what they could look to do is sell some of those US treasuries. So effectively, they're selling dollars and they're buying back JPY. Oh, my camera, guys. Uh-oh. Guys, we had a bit of a disaster with my camera falling off yet there, and I had to attend to some things. So anyway, let's just summarize that point regarding the Japanese officials. So if Japanese officials who have huge amount, as you saw there, huge amounts of US holdings, right, US Treasury holdings, and they're selling, right, some of those for portfolio rebalancing, given rates are going up domestically in Japan, and they'll take advantage of that as opposed to sending money overseas, right, or investing overseas in foreign land, then they're selling those dollars, right? So, and in huge chunky quantities, and then they're buying yen. So dollar weakness, yen strength, and that obviously is largely influencing dollar yen there as well. So there's so many factors that are influencing these yen pairs right now and forcing these, you know, drastic market moves. Okay, everything is extremely sensitive, and this is why I always preach it, right? This level of knowledge that I have is invaluable. Like my role as an analyst on the front line, you know, providing this information is almost like, yeah, providing this information to all these traders to capitalize on. I knew where to look. I knew what to look out for. I knew how to preempt things, right? And this is what I've been able to see. And this is why, you know, one of the reasons, there's many, many, many other things that are going to crop up in the market, which I don't want to, it's just too much for one, obviously for one video, one rundown. There's many things that are going to crop up as well as we go head into towards the latter stages of this year and early next year, but we'll save all of that. Okay. But with all these moves as well, as I say, that caused a bit of dollar weakness there as well. It wasn't helped by the fact that last Friday, obviously, as we covered ground on in the week ahead rundown, how we had softer labor market data as well. And markets are just fearing that we're going to have that hard landing in the United States where, you know, we come out of the high interest rate environment and we don't have a soft landing, you know, instead we have a hard landing. We enter into a recessionary bear market, you know, into a recession, the economy's contracting, so on and so forth. A soft landing is, you know, you come out of that, yes, growth's gradually slowing down, but we're not spinning into a recession, you know, after that high interest rate environment. But markets are fearing now that maybe the FOMC are not going to be able to cut rates as fast as they should have been. Okay, they've left it too late because remember, they still haven't cut yet. And there's speculation that the FOMC may hold an emergency meeting to cut rates, you know, so ahead of their decision in September. So much going on right now. Now, regarding the dollar, if we talk about the dollar for a moment, I do expect the dollar to regather its upside momentum on the basis of safe haven flows. Okay, because obviously, yes, we've had all this volatility. We've had all the volatility around, obviously, with what we discussed with yen. Obviously, dollar on the back end receiving that as a secondary impact from, you know, the selling of dollars and then buying of yen, all of that. But then also directly given the poor economic data, the poor labor market data, and just markets worried that US is heading for a recession. But so at some point that will be outweighed and the dollar will come back on top as a safe haven. On top of the while we're talking about safe haven, We still got issues in China. We've got a Chinese economic slowdown. China are largely slowing down. And obviously, they're a massive commodity importer. You know, they rely on Australia, New Zealand, you know, so on and so forth for their commodities. That's why in recent times, we've seen a bit of a slowdown in the Australian dollar as well, New Zealand dollar, a bit of underperformance in those two currencies. If you look at them across the board versus its peers, you would have seen in the part, obviously, there's a large amount of volatility at the moment. But, you know, if you look at likes of Euro Aussie, look at that, Euro NZD, you know, GPNZD, we had these big rises. GPLC, we had those big rises. Obviously, it's just a bit choppy at the moment, given this current situation, current volatile times. But anyway, so there's slowdown in China, and we've got these geopolitical tensions as well, where Iran could respond to Israel after, you know, the Hamas leader was killed. There's just so much going on in the markets right now. And this is why it's beautiful to just have this macro knowledge, because you just know, obviously, there's a lot, and you could get analysis paralysis, or you could just completely freeze and don't know what to do, or you just get caught off guard, or your account, your prop firm, or your personal account blows up because you're just not finger on the pulse, baby, you know. And this is why I got to a stage where I see all this information, right? It's all this information like coming in from all sources, but I just channel and funnel like that, you know, seriously. And you will get to that stage, you know, when you take macro seriously. So that's all going on at the moment, guys. So plenty of volatility, plenty of talking points. When we look at the calendar, just for obviously for today and just the remainder of this week, it's relatively light. You know, keep an eye on New Zealand jobs. So really, all of these underlying fundamentals, because there's not much major economic data this week, all these underlying fundamentals are going to still be influencing the markets. And we have to see what narratives are going to be really being run with. But as I say, I do really expect for the dollar to come out on top still in terms of those safe haven flows, because there's so much uncertainty, guys. And the dollar is the reserve currency of the world. So I do expect that to pick up some pace to the upside. We have bounced clearly here. As obviously I mentioned before, this was the next zone that we're going to watch out for. And so far on the weekly, this can end up being a big bullish pin bar candlestick, you know, where we've got a small body, and maybe this still finishes green here. We've got a small body and the long tail. That could be a big bullish pin bar. So let's keep an eye on the developments of this technically here as well. But as I say, fundamentally on a safe haven level, given all those concerns, the sensitivity in the markets, given the geopolitical tensions as well, the dollar can still very much come out on top and resume its upside momentum. All right, guys, so that's everything there. Let's just take a look at everything technically anyway. So guys, as a reminder, this was just a snippet that was taken from our TFTC Premium Morning Rundown, where we break down all of the key talking points, all of the key narratives that are driving the assets that we are trading, understanding the underlying fundamentals there, and obviously marrying those and tying them nicely with the technicals, and obviously how those fundamentals then translate on the charts, and looking at obviously daily opportunities. We do that, okay? We cover the theory, we cover the technicals on a chart, put them together, and obviously look at capitalizing on a daily basis. So if you are interested in that, you can get that obviously access to the TFTC Premium with obviously the fundamental bootcamp course. Okay, you get 1 month access, or you can just subscribe to the TFTC Premium. Anyway, guys, as usual, I hope you found value in this video. Okay, there's obviously a lot more that I must talk about that we can cover later on. I need to get into studio, sit and lay it all out on the line. Maybe we do it over a series of videos. I did say I was going to do that. Anyway, I'm blabbering on. Smash up that subscribe button for me. Smash up the like button. Drop a comment below if you found value in this. Keeps me motivated and hungry to want to provide more content to you. Stay lit, stay blessed. Let's get it.